Hi, and welcome back to FX Open's Market Insights video. And this week, traders will be watching some major news events that could shake up currencies, stocks, and indices. In the UK, unemployment and inflation data are coming out, which could move the pound and the FTSE 100. In the US, we have GDP and PCE inflation releases, plus ongoing geopolitical risks involving Greenland and Iran that are keeping the US dollar under pressure. On the corporate side, Netflix, Johnson & Johnson, Procter & Gamble and Intel are reporting their earnings with potential for some sharp moves there. But let's start with the UK, and the British pound began the year on relatively strong footing against the US dollar, trading near levels last seen in September 2025. However, the uptrend that started at the end of November has struggled to gain any real traction. Now, at the moment, traders are carefully weighing risk. Much of the sterling against the US dollar direction is still being driven by the US dollar, which remains highly sensitive to geopolitical developments as you would expect. Greenland, Iran, and Venezuela continue to be key sources of uncertainty. Now, because of this, the broader direction in sterling against the US dollar will likely depend on dollar strength, but short-term volatility could increase this week due to several important UK data releases. Now, first up is the UK unemployment rate due on the 20th of January at 9 a.m. GMT +2. Now, previously, the unemployment rate rose to 5.1%, the highest level since January 2021. Excluding the pandemic period, it was the highest reading since early 2016. As the data was in line with expectations, the pound actually strengthened but did not show increased volatility as there were no real surprises for the market. This time, however, any deviation, higher or lower, could trigger a sharper market reaction. Well, after those figures, traders will focus on the UK inflation rate. That's scheduled for the 21st of January at 9 a.m. GMT +2. Now, in November, annual inflation slowed to 3.2%, the lowest level for 8 months. It also came in under the Bank of England's own projection of 3.4%. Now, that sharp fall in inflation cemented the Bank of England's dovish monetary policy, putting severe pressure on the British pound. At the same time, the FTSE 100 benefited and moved higher. Now, looking ahead, if inflation moves further down, it may reinforce the views that the Bank of England will stick to its dovish stance. Markets currently do not expect a rate cut at the 6th of February meeting, although some easing later this year is still being priced in. So if inflation falls, it could support the FTSE 100, but at the expense of the British pound. Okay, now we're going to turn our attention to the US, and the dollar has been recovering recently, but remains around the levels that we saw at the end of 2025. Ongoing geopolitical risks continue to prevent both bulls and bears from establishing a clear trend. We had talks last week involving Denmark, the US and Greenland, but they failed to produce a breakthrough, keeping that issue firmly on traders' radars as well. In addition to that, we've got developments around Iran, and that remains a real concern, with the risk of escalation adding another layer of uncertainty. Well, alongside these geopolitical issues, there are several US data releases, and key ones at that, which could influence the market moves this week. First, we've got the final US GDP growth data that will be released on the 22nd of January at 3:30 p.m. GMT +2. Now, according to the preliminary release in Q3 2025, US economy grew at an annualized rate of 4.3%, the strongest pace for 2 years. Now, although final GDP data usually matches those earlier estimates, any surprise could spark some short-term volatility across US dollar pairs. And of course, we did have the government shutdown, and there was obviously struggles to get the information, so do keep that in mind. Now, later the same day, traders would also be watching the US PCE Price Index. That's due at 5 p.m. GMT +2. This release will cover October and November data together, following reporting delays caused by the government shutdown. Now, previously, annual PCE inflation rose to 2.8%, the highest since April 2024, while monthly readings remained pretty steady and in line with expectations. While markets are more than 95% confident the Federal Reserve will keep rates unchanged at its general meeting in January, the PCE data will be closely analysed for clues about inflation trends and what the Fed might do later this year. Okay, and finally this week, let's take a quick run through a few major earnings reports that could drive equity market volatility. First up is Netflix, and in their report, traders will focus on subscriber growth, ad tier momentum, and forward guidance. The stock is known for sharp post-earnings moves, so volatility is quite possible after their report comes out. Next up, Johnson & Johnson, and this will be watched for updates on pharmaceutical sales, medical device demand, and general outlook. Now, as a defensive heavyweight, its results can influence healthcare sentiment and broader risk appetite. Then we turn to Procter & Gamble, and that will offer us an insight into global consumer demand. Pricing power, volumes, and margins will be key for this report, especially in the context of easing but still elevated inflation. And the final big hitters this week is Intel, and that's especially important to the semiconductor sector. Data center demand and AI-related commentary could drive the stock and spill over into the broader chip space. Well, to sum up, this week is all about geopolitics and macro risk. Any fresh developments around armed conflicts or trade tensions could quickly influence not just currencies, but also commodities, equities, and indices. For real-time updates and in-depth analysis, make sure to check out the news and analysis section on the FX Open website. And as ever, we wish you luck for the week ahead, and don't forget your risk management techniques. Bye for now.